Good morning, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is the morning Forex report. I guess it's a New York morning Forex report for the December 21st, 2022, where I take a look at some of the technicals, define the biases, defining the risks. So let's get into it. We'll start off by taking a look at the euro versus US dollar and see what levels are in play. And when I look at this chart, this is the hourly chart of the euro versus US dollar. There's something that really sticks out in my mind, and that is these support levels against the green line. The green line represents the 200-hour moving average, and the price bounced against it during trading yesterday and moved to the upside. We came back down, tested it again, and bounced off of that level. Moved up to the 100-hour moving average into the Asian session today, and then moved back down to the downside. Sniffed the level through here, didn't really quite get to it, and then traded above and below the 100-hour moving average through here, but reestablished support against the 200-hour moving average in the late London morning session, maybe early U.S. session, really early U.S. session, and bounced off of that level again on two separate hourly bars. So that's good news for the buyers. The level is now more important. The level is defined. We know that if the price were to stay above it, that's more bullish. If the price moves below it, it's more bearish. Where we'd expect more bearish with the 50% as the next target on the downside. That's of the December move from this low to this high right here. So that would be our target on a break below that level. Absent that, and we are seeing the price move higher, the 100-hour moving average, although it hasn't been acting all that great through here, through the last few days with the price moving above and below it right here. We're still going to watch that 100-hour moving average for potential of support buyers at 1.0619. If the price is able to hold above that level, that is more positive for this pair. And we'd have the price or the traders looking up toward this high, these highs right here. This was the high on December 19th. And this is the high during yesterday's trade on December 20th. So Monday and Tuesday highs would be the target on the top side. On the downside, we have the 200-hour moving average. So we're trading in between those two levels with the 100-hour moving average as our barometer in the middle of those two bookend support and resistance levels. So that's a euro versus US dollar technical look. Let's take a look at the dollar versus yen. And instead of looking at the hourly chart, I'm going to look at the daily chart because this chart has the story from a technical perspective, and that story was defined by a couple levels. One is this area through here where the market found first resistance and then support against this area on this day right here. The price did move below that swing area here, but what did we do? We found support against the 100-day moving average. It's a blue line in this chart and routes to the upside, and the next time the price came down to that level, we based against the swing area right here, and that's forced the price all the way up to the top side that we saw peak in the month of October at 151.938. Now we have seen the price since then move steadily to the downside, and yesterday we had the Bank of Japan actually change their policy by letting the 10-year yield move up toward the 0.50% from 0.25% that they've been putting a lid on at that level. So that sent the yen to the upside here, sort of leading the giving the chart some fundamental news from the Bank of Japan to actually move lower. This was just more of a technical move to the downside here. Maybe the U.S. It was focused on the U.S., but now we have the Bank of Japan in play here as they change their policy a little bit and send the yen to the upside. Now that move to the downside, or move to the upside in the yen, the move to the downside in the dollar versus yen, if the dollar yen goes lower, the yen is going higher, did have a limit, and that limit was at this low right here from the early August level. That level came in at 130.38, and the low price yesterday, although it looks like it's closer, came in about 17 pips within 17 pips of that low. The low needed to the low came in at 130.55, and the price bounced to the upside. Now, the price has since moved back above this swing area, which is about 75 pips between 130, 125, and 132. Stay above the 132 level, keeps the buyers more in control, and we'll start to look toward the 50% retracement of the 2022 trading range. This is the low, this is the high, 132.70. We're currently trading 132.42. So that's going to be our next target on top side for the dollar versus yen. That's the story for that currency pair. Let's take a look at the sterling versus US dollar next. And what we on the daily chart again, what we notice here is that the green line represents the 200-day moving average over the last 4 trading days, 1, 2, 3, 4. The price has sort of skimmed against that level and found support buyers near it back early in early December. We also came down to that level after breaking above on the first day of December and found support buyers. Moved up to the 61.8% retracement ceiling right through here and found sellers against that level. So if I were to characterize its support and resistance in this currency pair, it is against the 61.8% retracement on the top side and against the 200-day moving average on the downside. Clearly trading at 120, 140. The 200-day moving average is at 120.84, so about 60 pips away from that level. Be aware of the 200-day moving average and look if the price were to move below that level, it would be more bearish. If the price stays above it, it's still more bullish. Let's take a look at the hourly chart. And on the hourly chart, we have a new resistance level on the top side, not way up at the 61.8 at the highs, but against the 100-hour moving average and trading here today. The price in the Asian session, early European session, came up to test that 100-hour moving average, moved back down, tested the 200-day moving average here. You can see yesterday we moved a little bit below it, but then reestablished support here. So the 200-day moving average is doing its job on the downside. The 100-hour moving average is doing its job on the upside. And also the 50% retracement of this last move to the upside is right near the 100-hour moving average. So that increases this level's importance right through here. So watch that level, 121.72. If we move above that level, then we start to move higher with the 200-hour moving average, this yellow area right here as the next targets for the sterling versus US dollar. Finally, let's take a look at the dollar versus Canada. In that currency pair, we've seen lots of volatility in this pair, but we came up into the 100 and 200-hour moving average and found sellers against that level, moving back toward the 200-hour moving average. Watch 136.21. If we stay below that level, that's more bearish. If we move above, it's more bullish. And I lied. I'm going to take a look at one more, the Aussie versus US dollar. Why? Because the price moved above the high prices from yesterday and earlier today. We also moved above the 100-hour moving average near that level as well. So this level at 0.6694 is going to be support now. If the price is able to stay above that level, it's more bullish. If the price moves below it, it's more bearish. But right now, the buyers are making a play on the Aussie versus US dollar with a 38.2% retracement of the move down from this high down to this low as the next upside target at the 67.29 level. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.